If you get paid as a 1099 worker and you are guessing at your tax set-aside, this is the video that fixes that. Self-employed people pay two federal taxes on profit: income tax and self-employment tax. Self-employment tax alone is 15.3% on the first $168,600 of net earnings. Add federal income tax on top, apply a couple of deductions you automatically qualify for, then layer in your state, and most self-employed people land somewhere between 25 and 35% of every deposit. If you want a single starting point before you do any math, 30% is it. If you filed a self-employment return last year, finding your real rate takes about 5 minutes. Pull your total federal tax from line 24 of your 1040. Divide it by your gross business income from Schedule C. That is your federal rate. Add your state's effective rate on top. Then round up 3 percentage points for safety. That final number is what you set aside on every deposit going forward. No prior return to reference? Start at 30% if you live in a state with income tax. Start at 25% if you live in a state without one. The biggest first-year mistake is borrowing a friend's number. Their state, their bracket, and their business structure are not yours. If you are going to be wrong on the high side. A small refund beats a tax bill you cannot cover. Your set-aside rate assumes an average level of deductions. The more you track, the lower your real tax bill. Business expenses, a home office, mileage, self-employed health insurance premiums, and retirement contributions like a SEP IRA or solo 401k can all reduce your taxable profit. Two people with identical revenue and different tracking habits can end up 10 percentage points apart on their effective rate. Disciplined record keeping is not just tidy. It is worth real money. The mistakes that cause real pain in April are predictable. Setting aside on net instead of gross. Forgetting self-employment tax exists. Dipping into the tax account for emergencies and telling yourself you will replace it. The tax account is not your emergency fund. That money belongs to the IRS the moment it lands. Set aside on every gross deposit the moment it clears. Keep it in a separate account and do not touch it. The hardest part is not picking the number. It is actually moving the money every single time a deposit lands. Able handles that automatically. You set your tax percentage once. Every deposit you log gets split. Tax comes off the top, before bills, before the surplus, before anything else. Your tax account fills in the background. When quarterly payments are due, the money is already there. No decisions on a Tuesday when you are tired. No April surprises. From unable to able. Try it free for 30 days at becomeable.app.